Howdy, y'all. Welcome back. I'm Raymond Dahlman, and this is the weekly economic update for December 13th, 2021. I hope everybody had a good weekend out there in the interwebs. It was a bit of a sad weekend with some of the storms that came across the Midwest from eastern Missouri all the way down into, Kentucky and Tennessee and that area. So if you know anyone out there who was affected, keep them in your thoughts, and let's hope hopefully they're able to find some of those other folks that may still be trapped. So, all right. As far as, like I said, other than that, I hope everyone had a good weekend and stayed safe, and hopefully got a little exercise and sun. It was pretty beautiful here in Colorado. We had a little bit of snow on Friday, I guess, but it wasn't too bad. It maybe, I don't know, that much. Cleared it off with the driveway scraper pretty easily. Didn't have to use the snowblower. So, all right. Well, let's go ahead and dive into the weekly economic update. All right. The week on Wall Street, a more benign reassessment of possible economic risks posed by Omicron sent stocks sharply higher last week. The Dow Jones picked up 4.02%. The S&P 500 was up 3.82. The NASDAQ gained 3.61. And internationals were up 2.74. So pretty good across the board. Assessing Omicron. Though much is still unknown about the Omicron variant, reports of potentially milder health effects and efficacy of booster shots ignited optimism that its economic impact would be less severe than originally feared. Stocks rallied higher each of the first 3 days, with strong gains in many of the reopening stocks, such as airlines, travel and leisure, financials, and energy. The performance of high valuation growth companies was a bit more erratic as they rose and fell sharply throughout much of the week. Weakening Thursday, stocks turned higher on Friday despite a hot inflation number pushing the S&P 500 to a new record high. Inflation factor. November's CPI came in at a nearly 40-year high, rising 0.8% from the previous month and 6.8% from a year ago. It's the sixth consecutive month that inflation has exceeded 5%. Core inflation, excluding more volatile food and energy prices, came in lower, but still posted its sharpest jump since 1991. Economists have attributed this elevated inflation rate to strong consumer demand, a shortage of goods due to supply chain constraints, and strong wage growth. How long this level of inflation persists is unknown, but the Fed has begun considering policy steps to manage it. The inflation is due to the amount of dollars created over the last 2 years. Pretty much that's it. Yes, there's some inflation from people being out of the workforce and getting stimulus checks. More money chasing fewer goods is obviously going to increase prices. But when you dump all this, if we hadn't dumped all this like $4 trillion into the economy, yes, there would be inflation. However, it wouldn't be this extreme, at least in my opinion. So, all right, some economic data coming out this week. On Wednesday, we have retail sales and the FOMC announcement. Thursday, jobless claims, housing starts, industrial production, and the PMI composite flash. There's a few companies reporting earnings this week. Thursday is Adobe, FedEx, and Lennar. And Friday is Darden Restaurants, for those of you who like, what are they? I guess Longhorn Steakhouse. All right, so that's everything there in the weekly update. I am also distributing a retirement insight for those on my mailing list. Let's go ahead and dive in and read through the relevant stuff. When you are within 5 years of retirement. If your anticipated retirement date seems about 5 years away, think about some of the proactive steps you can take before that date arrives. Acting now could save you some stress later on when you move from your full-time career to the next phase of your life. Take an hour today to candidly assess how much of your money you spend on a typical month, your essential and discretionary outlays. You can draw a comparison between this monthly number and monthly income, and the monthly income you are likely to have once retired. Choices can be explored to try and narrow any income gap if needed. If it helps to have a cash reserve as you leave your career or business, because arranging that first Social Security payment or retirement withdrawal may take longer than you initially anticipate. If you are confident that you will enter a lower tax bracket once retired, it may make sense to boost your tax-deductible retirement contributions. Give some thought to capital gains should you want to sell highly appreciated securities or a highly appreciated home in the near future. Keep in mind, this article is for information purposes only and not a replacement for real life advice from someone like myself. All right. Get treatment at home instead of the hospital. In theory, many acute illnesses could be treated by medical professionals making house calls with little push from the pandemic. Doctors, nurses, and home healthcare providers out west and in the east putting theory into practice. Hospitals and healthcare networks in Denver, Tacoma, and Sioux Falls, and Baltimore are now offering degrees of at-home care for illnesses such as urinary tract infections and pneumonia. Next Avenue reports, and other providers and hospitals may follow, especially at a moment when hospital beds are at a premium in some metro areas. When a nurse or doctor comes to treat you at home, you can talk to them in the comfort of familiar surroundings, and that medical professional can observe aspects of your daily life, which may inform your treatment. Just as in a hospital or urgent care center, Medicare recipients can expect that program to pay its share of the bill. X-rays, blood work, antibiotics, and EKGs can be administered in-home. It can be administered in-home settings now, thanks to advanced technology, and the trend may point to a new path of healthcare. See, that's a terrific idea. Keep people at home where they're, more comfortable. If they're not going to just kick the bucket at any moment, that's probably the best course of action. And then let me make some comments about, planning your budget. If you're working with a financial professional like myself, we've probably gone over your budget multiple times over the years just to make sure as you're getting closer to your retirement date that you're not going to overspend and run out of cash in like 5 years. So definitely some good advice there. All right. And then one white paper going out. It's titled Fed Chair Changes His Tune. Powell's testimony to Congress may be telling. I think we probably have talked about this in recent weeks, but let's go ahead and breeze through this real quick. If you weren't paying close attention, you might have missed it. Fed Chair Jerome Powell dropped the word transitory when describing inflation during his recent testimony to Congress. Powell had told the story of transitory inflation for the past several months, while the consumer price index showed eye-popping year-over-year gains of 5% to 6%. But now it appears the Fed chair has changed his tune. Really? Powell said that rising energy prices, higher rents, and strong wage gains could keep inflation elevated, though he maintained that inflation would decline sometime in 2022. Wow, he must have a crystal ball. It's amazing. So does this mean it's time for investors to prepare their portfolios? Who knows? Inflation and interest rates are only two factors in an overall investment strategy, and at this point, the Fed has only provided a rough timeline about when to consider raising short-term rates. As hard as it can be, sometimes a wait-and-see approach is best. Recent market volatility has been making headlines, which can be unnerving. If you find yourself second-guessing your approach, speak to a financial professional. I might know someone. It may be a smart move. All right. So that's, we've talked about this a lot over the last few weeks. As far as, the inflation situation, what the Fed has stated they're planning on doing over the next, 8 months. Between now and June, as far as, possibly speeding up their taper and reducing their bond purchases at a quicker pace. But I, just based on everything I've read and listened to coming out of the Fed, I would not expect interest rates to start going up until the Fed taper is completed. So, we're at least, even if they sped up the taper and doubled it and, it was done by, say, March, that's still 4 months away. So let's see where things go. All right. I did have one article and one video that I wanted to share with you. The first one is a opinion article from the Wall Street Journal written by Kevin Warsh. He is a former Fed board president, and he's talking about, the inflation. It's titled, "The Fed is the main inflation culprit. The central bank has enabled price increases that may soon pose a risk to financial stability." This was published yesterday. All right, so let's go ahead and dive in. If price stability is squandered, financial stability is put at risk. If financial stability is lost, the economy is imperiled and the social contract is threatened. During the past several quarters, U.S. inflation has surged, now running about triple the Federal Reserve's 2% target. The surge in prices is unlikely to reverse on its own. The longer that prices are unstable, the greater the challenge to conduct macroeconomic policy. The last thing the country needs is a third major economic upheaval in a decade and a half. The consequences of inflation and the attendant risks have long been understood. In 1898, economist Knut Wicksell explained, changes in the general level of prices have always excited great interest. Obscure in origin, they exert a profound and far-reaching influence on the whole economic and social life of a country. Inflation is the sincerest form of fakery, a surge in the cost of living that robs hardworking Americans of fruits of their wage gains, an incomparable asset boom predicated on perpetual low interest rates, alchemy for an overly indebted nation, vulnerability that can lead to miscalculation by fierce geopolitical rival, and despair by the body politic whose common sense is at odds with the anxious conformity of those in power. Inflation is a choice. It's a choice for which the Fed is chiefly responsible. The risk of an inflationary spiral arises when policymakers first dismiss the problem and then cast blame elsewhere. Inflation becomes embedded in the price formation process when central bank acts belatedly or with insufficient conviction. To date, the Fed has acted as an enabler. The sure sign of a problem when a president gives voice to the scourge of inflation and takes executive action well before the central bank acknowledges the severity of the situation. Supply chain bottlenecks is the popularized rationalization for the surge in prices, but the supply chain story sheds more shade than light. Consumer prices are higher because prices are rising at points of production, assembly, and transportation. This is a description of the state of affairs, not its source. The Fed's inertia in withdrawing extraordinary monetary policy amid full employment is the proximate cause of surging prices. When monetary policy is too tight, it slows aggregate demand. When monetary policy is too loose, it damages aggregate supply. And so just for the layman's out there, when someone says that economic policy or that the Fed policy is tight, typically that means that they are keeping interest rates at or lowering interest rates or pushing them down near zero. And that's reverse. Tightening is when interest rates are rising so that it reduces demand on loans. And loose monetary policy is when interest rates are makes lending very cheap. So that's considered loose. So I'm sorry, I had that backwards, but that's what they mean. When it's loose, they're letting money flow at very low interest rates. When it's tight, they're restricting the amount of lending because interest rates will, the higher the interest rate, the more it's going to depress lending in the market. So, all right. It damages extraordinarily aggressive monetary policy, namely quantitative easing, discourages investment in real assets like capital equipment relative to financial assets such as stocks. That's why non-residential capital investment in the real economy, things like port modernization, is running 7% below the pre-pandemic trend and 25% below trends since the advent of QE. A more exuberant stock market and less resilient real economy are both consequences of the Fed's extant policy regime. By August of 2020, the Fed had become impatient with the purported low inflation rate of Ben Bernanke and Janet Yellen's years. Chairman Jerome Powell called low inflation, which averaged 1.7% in the prior decade and a mere 0.3% below the Fed's target, that preeminent economic challenge of our time. So the Fed bet on a new policy regime to get inflation higher. It worked. It's not the first time that a central bank wanted a little more inflation and got it. Last year, in another break of precedent, the Fed loudly and explicitly endorsed a blowout of federal spending. Congress swiftly agreed. Federal spending increased from an average of about 21% of gross domestic product in the prior decade to more than 30% in fiscal 2020 and 2021. National debt relative and GDP increased from 79% in 2019 to more than 100% today. Most troubling, the Fed bankrolled the fiscal profligacy. That's a big word. I can't. Purchasing more than half of the new Treasury debt issued this year, calling it monetary dominance. So what happened there is, as the government is issuing bonds, the Fed is just buying them up with newly created dollars. So it's, the general public like you and me are not the ones buying those debt instruments from the government. It's just the Fed buying them up, putting them on the balance sheet, and giving the fresh cash to to the government. All right. In congressional testimony recently, Mr. Powell made it clear he was surprised and troubled by the medium-term trajectory of inflation. At this week's FOMC meeting, the Fed seems ready to abandon its policy errors. Achieving a soft economic landing at this late stage is difficult if the sole task were to drive inflation down. The Fed would immediately taper its asset purchases and start raising interest rates. But a significant tightening cycle would likely cause market volatility to surge and assets to reprice. The authorities have expressed little concern about financial excesses, bubbles, or financial imbalances. Hope they're right. I expect tension between the Fed's goals of price stability and financial stability to be in sharper relief in the next year. So, all right. So it's almost it. Basically, he's pointing out that the Fed, most of the problems we're dealing with right now are self-inflicted gunshot wounds because we freaked out over a cold, and now the world is, losing their damn minds. All right. Let's jump over to this. For those who've been, watching the news or reading the paper, you're probably seeing a lot of rumblings about Russia and Ukraine and the problems that they're dealing with. I think there was a senator recently, or maybe a congressman, that was saying that, we stand behind Ukraine, and if it means sending troops and, up to nuclear weapons, that's what we would do to stand with our ally. And it's, I didn't realize our eastern border was in Ukraine. So I'm not sure why we would send our men and women over there to get exterminated. All right. So this podcast, it is from Part of the Problem. It's one of my favorites. Dave Smith is the host, and his guest is Scott Horton. Scott is a genius when it comes to foreign policy. His specialty is the Middle East, but he knows basically anything outside our shores. He's got a really good handle on. So let's go ahead and listen to a couple of minutes of this. I do have the speed up at 1.25 just to make it go a little faster. But we're gonna take a few minutes, listen here, and he's going to talk about what has led up to where we are right now with Russia and Ukraine.
All Russian, and as an official language, and declare that they were going to kick the Russians out of the naval base at Sevastopol. And in fact, it was, I think, 4 different Ukrainian presidents had signed a letter demanding that the Russians be kicked out of the naval base. So it was only then, I'm off my train of thought, but I'm back on my previous train of thought that I was off. Only then did Putin's little green men leave their naval base at Sevastopol in a coup de main and just take over the Crimean Peninsula. And he had joked, I think it was after that. I'm pretty sure he joked after that with Oliver Stone that, we like NATO and we like cooperating with NATO. We don't have anything against our NATO friends and partners, but we just thought that we would rather that they come and visit us at our naval base for the holidays instead of us going to visit them. It's like he's trying to make light of it and be nice about it, but he's just saying, again, this is a red line of ours. Yeah. And are we going to lose? And people need to understand that, especially from the point of view of the American hawks. They're extremely explicit about this. Sevastopol is Russia's only warm water port all year round. Everything they have on their eastern coast and on their northern coast freezes in the wintertime. And so this is their only port in warm water port. And in the American hawks view, I think in Zbigniew Brzezinski's words, and Barack Obama's, I think, framing of it as well, that without Sevastopol, they're not really even a regional power. They get taken down a notch in stature on the world stage entirely without this direct access to the Black Sea for their navy. And so that was why they were trying to take it away. And that was why Putin wouldn't have that. I know what it was. I'm sorry. On the Newland call, she refers to Joe Biden and says the vice president, the Germans are taking too long. People remember the phrase, this is what got all the attention, is our diplomat, Robert Kagan's wife, Victoria Nuland, used the F word and said, F the EU. Well, what was the context to that? Oh, she had to apologize, Dave, for using bad language. What was the context? She was saying the Germans are taking too long to do this coup d'etat for us. So we're going to go ahead and take over the operation and do it our damn selves and F the EU because they're taking too long. So we're going to get Robert Sari from the UN, and he's going to work with the vice president, Joe Biden. And we are going to glue this thing and midwife this thing and force this thing through and have this coup. And so that was why they hired Hunter Biden, is because they knew that Joe Biden was, as they put it, holding the Ukraine brief in the Obama White House, that was his priority. And he was the point man there. So, he was in great measure responsible for this crisis in the first place. And speaking of Victoria Nuland, she was briefing the Senate last week on here's what's going on with the crisis and why we got to do something horrible about it. And of course, the senators are all a bunch of idiots who don't know anything about this story, who don't remember 2014, who, if anything, they remember the EU, but they don't remember why. Yeah. They don't remember what was going on there or what had happened there at all. And but I would just, to try to wrap up that point, I would emphasize the Russians were perfectly happy to pay their lease for 30 years, 25 years. They paid their lease and they had their naval base and the status quo held and it was fine. It was only after America overthrew the government, in fact, twice in 10 years, in the Orange Revolution of 2004 and in the Nazi street putsch of 2014. And then a direct threat of the new Ukrainian Nazi-backed junta to overthrow and kick them out of Crimea. Only then did they seize the Crimean Peninsula. And I know we're over time, so let me just sum up here too about the war in the East broke out because, again, the government that was overthrown was a democratically elected government. The EU and independent European monitors had verified that it was a free and fair election in 2010 when the pro-Russian leading guy Yanukovych had won. And so when he was overthrown, the people of the far eastern Donbass region who had supported him said, well, if you guys can occupy government buildings and refuse to recognize government authority and all these things, and in fact overthrow the government, create a new, as we see it, completely illegitimate government, then we'll just occupy all the government buildings around here and we'll refuse to recognize your authority until we get to hold some new elections that we say are free and fair and what have you, right? So then what happened? Kiev launched a war on terrorism and invaded the east of their own country. And so then they held elections, free and fair ones, where none of the pro-Russian speakers were included. And then, it's a democracy now. And it's not true that it's like all Nazi officials holding the highest posts, but they're part of the coalition. And they're sure as hell part of the armed forces, the National Guard and the army divisions that are fighting that war in the East. And they have been this whole time. And then all during the war, and the worst part of the fighting was in 2014 and 15. And during that whole time, they just pretended, especially in 2014, they just pretended that Russia was invading Ukraine. Russia invades Ukraine. Top story above the fold, New York Times, front page. Not true. Never happened. All that happened was they sent deniable special operations forces across the border to help the people of the Donbass keep the Kiev government out. But they could have rolled 500,000 men in there if they wanted to. They didn't do anything like that. They never sent in armored divisions and infantry divisions. They sent in special operations forces and equipment. So the Minsk II pseudo peace deal, which is more or less held since was in February of 2015. And then I'm pretty sure it was shortly after that in March that they held a plebiscite in, a referendum essentially in the Donbass voting to join the Russian Federation. And Putin told them no. Yeah. So I don't want you, essentially the Donbass is like a decrepit old industrial region that can't compete, that's a money pit, essentially. It's got an elderly population that are another liability in terms of all the pension costs and everything. And there's really nothing strategic for Russia to gain from absorbing the Donbass. Like if they went all the way to Odessa, maybe there'd be some profit in that, but they sure have a hell of a lot to lose over that. And it goes to show that Putin has no interest in trying to take over Ukraine. It's essentially fair to take him at his word, that what he wants to know for a fact is that we are not bringing Ukraine into NATO and we're not going to deploy our forces there. And it'd be nice if the Americans would back off on all of their training with their nuclear bombers and their ships in the Black and Baltic and Okhotsk seas, where, our long-range bombers are constantly testing their radar defenses and all of these things, essentially threatening first strike nuclear war against them for no good reason at all. And that's the real bottom line here, Dave, is that when it comes to Russia and China, let's pretend that you really thought there's such a problem. Well, let's just talk with them and deal with it. But why would there be any militarism to this at all? The Soviet Union is dead and gone. And say what you want about the Chinese dictatorship. It ain't Mao starving people to death by the tens of millions anymore. It is what it is. And yes, they're independent from our empire, but I can live with that. And Taiwan, it's been American policy and American law for 50 years that Taiwan is part of China. So even if China did take it by force, which I hope they don't do, and I hope if they do that America stays the hell out of it, that still doesn't mean that they're going to roll into outer Mongolia and then they're going to invade across the water into Japan and sack Tokyo. And then they're going to move into North and South Korea. And next will be Australia and all of this stuff.
Yeah. All right, let's go ahead and pause that there. Definitely a good synopsis of what has led us to here, and some of the other aspects of diplomacy that we're dealing with right now. So, I mean, just looking at it, from the 30,000 foot macro view, maybe if America spent less time poking other countries in the chest and causing problems, maybe we wouldn't have all these skirmishes all over the world. I don't know. what do I know? I'm just some guy sitting here in the mountains. All righty. Well, I hope everyone has a fantastic week out there. And if you need anything from me, be sure to send me an email, drop a phone call. And let me show my email address. There it is, r.dahlman@dsafinancialgroup.com. And I'll be back tomorrow with the Liberty Call. And, like I said, if anyone needs anything from me, just let me know. Or if there's a subject you'd like me to discuss or drill down on, I'd be happy to do it. Y'all have a fantastic evening, and I'll be back tomorrow. Bye-bye.